Welcome to the third class of Indian economy, people. Yesterday, what we have covered, some of the microeconomic concepts which were left out, right? Which were there in the chapter one, we have covered yesterday. For example, we started with the concept of shift of the curve and movement along the curve. Okay, shift of the curve and the movement along the curve, right? What is shift of the curve? Whenever any factor apart from price of the commodity, I repeat, whenever any other factor apart from price of the commodity changes, right, we'll observe a shift of the curve. Remember that when your taste and preference will change, when your income will change, right, whenever price of the related goods will change, we call it as a shift of the curve. If only the price of the commodity changes, right, that is basically the concept of movement along the curve. That is, either we will move upward, right, on the curve, or we will move downward, right, along the curve itself. That is called as movement along the curve. After that, we have discussed the types of goods, right, different types of goods, right. One is a normal good and inferior good. This classification of normal and inferior, it is based on the income of the person, right. That is, whenever the income changes, right, the demand for certain goods will change. These are called as normal goods. That is in the same direction, positively related. And another set of goods, when the income will increase or income will change, the demand will change in exactly opposite direction. That is inferior goods. Now, before I go forward, I just want to make one correction. Yesterday, I just made a mistake, right? I'm saying it was my mistake. I just want to make one correction. Do you remember this? Yesterday, I gave you example of white goods. Let me know. Yesterday, do you remember I gave the example of white goods? I said the ACs, right? Air conditioners, ACs, right? Or let's say the refrigerator, etc. Right? These are examples of white goods. These are correct. But only one product there, right? I've classified it wrong, right? TV, television, right? Many of you said, sir, television color is black, right? In fact, I thought my mistake. Okay, I thought I was discussing consumer goods. I said all of these are part of consumer goods or white goods. So TV, radio, etc. Please remember the classification. These are classified as brown goods. Any problem now? Please do let me know. These are classified as brown goods, right? The AC, washing machine, right? All of these are white goods. No issues, right? A TV, radio, these are generally referred to as brown goods. Okay, just make one correction in the this thing, the annotated PPT as well. Now, after that, we have discussed different classes of goods, right? One is a public good, private good, right? Apart from this, we have discussed substitute goods, complementary goods, etc. Okay. Now, this is one classification. After that, what we have discussed, elasticity, right? Concept of elasticity. Now, what is this idea for elasticity? Elasticity measurement is basically when one parameter changes, what is the impact of that, right? What is the impact of that on the change in the demand? Simple. A parameter changes, and based on that, what is the change in the impact on demand? That measurement is called as elasticity. In case of elasticity, we have discussed four types of elasticities, right? One is price elasticity of demand, income elasticity of a demand, cross elasticity of a demand, and price elasticity of supply, right? So basically, what are these elasticities? What is the implication, right? What is the meaning in each of the cases, etc., etc.? I've discussed, right? In fact, you can check it. We have discussed all of this. For example, if CES is greater than zero, that is positive. What is the meaning of it? If CES is less than zero, negative, what is the meaning of it? Right? If IED is more than this much, what is the meaning? Less than this much, what is the meaning? Right? What is more elastic? What is less elastic? What is the elasticity for essential goods, luxury goods, etc.? We have discussed all of them. Then we have discussed a concept of savings, investment, and capital formation. What is savings? Savings basically refers to the part of the income that will not be used for immediate consumption. Very simple. Part of the income that will not be used for immediate consumption. Then we have discussed what is investment. It is part of the income that will be used for purchasing capital goods in the market. And what is capital formation? Capital formation basically means it refers to addition to the capital over a period of time. From this year to next year, how much is the addition of the capital, right? From this month to the next quarter, how much is the addition to the capital, etc., etc. That is basically the concept of, right, let's say the capital formation. And then we have discussed what is the importance of capital formation, etc., etc. Now, after that, we started with the next chapter, national income aggregates. In case of national income aggregates, yesterday we started with GDP. Do you remember this? Yesterday we started with GDP, gross domestic product, right? Gross domestic product. What is gross domestic product? The market price of all the final goods and services which are produced within a particular geographical area. That is, let's say in India, in one quarter, right? I hope remember yesterday we've discussed all of this. What do you mean by half a financial year, full financial year, right? What do you mean by a quarter in the economy, etc.? Right. So in a quarter, what is the market price of all the final goods and services which are produced? It is called as gross domestic product. But I've told you yesterday also, please remember this. What is more important in GDP? Remember, GDP is referred to as a territorial concept. GDP is referred to as a territorial concept. What do you mean by territorial concept? Whatever is produced within the territory of India, whatever is produced within the territory of India, whether by an Indian company, by a foreign company, whether the software engineer is an Indian, foreigner, doesn't matter. The production should have happened within India, right? So that is the reason this is referred to as a territorial concept. Now, there are three different ways through which we measure GDP. One is called as a output or product value method. Whatever is the final goods and services, count it, multiply that with market prices, you will get GDP through output method. Second one is a income method. Take the sum total of all the factor incomes, right? That will give you, right, basically the GDP through income method. Third one is the expenditure method, right? I gave you examples of all of them. In fact, I gave you calculations also yesterday. Today, we'll get into the details of GDP calculation. What is expenditure method? How much is the total expenditure done on final goods and services which are produced in India? How do we calculate it? Simple. Take the total expenditure done by, right, households in India plus government plus companies. Right? Of course, we will spend on goods and services. All of you will agree? We will spend on final goods and services. Government will also spend on final goods and services. Even private sector will also spend on goods and services. So logic is simple here. How much is the total expenditure done by households, consumer expenditure, plus, right, the companies plus government. But one of the factors that you need to consider is the argument that some of these final goods and services are imported. Some of these are imported. So subtract whatever has been imported. And some of these final goods and services which are produced in India are exported. So add these exports. That will give you basically the market prices of all the final goods and services which are produced in India. Right. So yesterday we have discussed. In fact, I've proved this yesterday also. Whatever GDP you get through production method, output method, production method or income method or expenditure method should be one and the same. Do you remember that factor? Please do let me know. Whatever GDP number you get through output method, income method and expenditure method should be one and the same. Let me prove it again. Right? Let me prove it again. Have a look at this. Imagine, right, I'm calculating GDP for one country and let's make it very simple so that you understand. Let's make it very simple. And do not worry, sir, what about taxes, etc. Today you will understand. Don't worry, I'll give the detailed explanation regarding that. Let me prove it again how GDP value should be one and the same in all the cases. Let's take a very simple example. Imagine only one final good is produced in India. Only one final good is produced. Now, company A will produce intermediary good, sell it to company B. Right? Company A will produce intermediary good, sell it to company B. Company B will use this intermediary good, sell it to, right, basically a buyer. Right? Use the intermediary good, produce a final good, sell it to the customer or a buyer in the market. So in step one, let's imagine your company A. So you will use labor services of 100 rupees and you want to earn a profit of 400. So you will sell the product to me, I am company B, at 500 rupees. Now I have purchased raw materials at 500 rupees. I will use labor of 200 rupees and I also want to earn a profit of 300. I will sell it in the market at how much? 1000 rupees. And the consumer in the buyer, sorry, consumer is the buyer, right? The buyer in the market will pay 1000 rupees and purchase the product from the market. Now let's start. Let's start. First method is what? The output or production value method, right? How do I calculate production value method? How many final goods and services are produced in this economy? Let me know. How many final goods and services are produced in this economy? All of you will agree only one? Only one good is produced. What is the market price of the good? 1000 rupee. So 1 into 1000 rupee, what is the GDP through output method? 1000 rupee is the GDP. Come to the second method, income method. Total factor incomes. Total factor incomes. Count the total factor incomes. Here factor income is 100 plus 400. Here factor income is 200 plus 300. Count the total factor incomes. Right, so wages are 100 plus 200, 300 rupees. Profits are 300 plus 400, 700 rupees. So what is the GDP through factor income method? What is the GDP through factor income method? The sum total of all the factor incomes is basically 1000 rupees. Come to the third one, expenditure method. Right, how much expenditure has been done on final goods and services here? How much is the total expenditure on final goods and services? The buyer has purchased this product in the market and has paid 1000 rupee. That is basically the 1000 rupee money spent in the economy on final goods and services. So you please have a look at it and please at least tell me now, is it okay if I say GDP value either through production method or income method or expenditure method should be one and the same? All of you agree? Should be one and the same. Now, before I go forward, should you by heart this calculation? Absolutely no. Please do not waste your time. Do not by heart this calculation. Just to make the concept clear to you, I've given you this calculation. UPSC will not ask you all of this. UPSC is not going to ask you all of this calculation. What about cost of raw material? My dear, you tell me. We are in the third class now. Yesterday's class, have you attended? Should you consider the cost of raw materials when you're calculating GDP? You tell me. Right? Having attended yesterday's class, should we count the cost of raw materials? You should not count, which means you are not revising. Simple. It shows that you are not revising. So argument is the cost of raw materials, if you count it, then it will lead to double counting. Yesterday, in fact, I showed you my bottle, flask, and I proved if you keep on counting raw materials, it will lead to double counting. Done? Income method. My dear, factor incomes. How many factor incomes are there here? Right? It's not at all difficult. How many factor incomes are there in this example? How many factor incomes? Labor, profit, labor, profit. Add all of them. Add all of them. Right? So basically, you will have 1000 rupees again. Okay? Right? So this is how, right, we simply say that all of these, right, all of this should give you one and the same number. Okay? But sir, cost of raw material should be added in factor income. Arey Baba, you're basically adding so many things here and there and you're getting confused. Please revise. In a production value method, what we count yesterday, we have discussed. In income method, what should we count? We have discussed yesterday. In income method, should we add cost of raw materials? Tell me then, what is the difference between production method and income method? You're not revising. Please revise. Income method, we are supposed to take factor incomes. And you're saying raw materials add in factor incomes. How? Don't mix up everything. Don't complicate all the issue. Okay, keep it very simple. Let's start now. New method, new methodology to calculate GDP. This we have introduced from 2015. This new methodology we have introduced from 2015. Okay, let's start. Now, what are the important changes that we have done in the calculation of GDP? Right, follow this, slightly technical, but it is important. UPSC last year has asked a question on this. Right, it has already asked a question on this. Now, what are the important changes that we have done in the GDP methodology or GDP calculation methodology? And what kind of methodology I'm talking about here? I'm talking about output value method or production method. First point, the base year has been changed from 2004 and 5 to 11 and 12. Please read the statement after this. Please read the statement, right? Don't keep on asking questions on base year. We will cover it later. Have patience. Okay, first point is this. We have changed the base year. Second point is we have changed the coverage. Coverage means how the industry data is collected. How industry's data is collected, we have changed the methodology. How, sir? What is the reason? Simple argument here. Until this new method was introduced, we used to collect industrial output data. How much industries has produced, we used to collect that data through a concept called as annual survey of industries. We used to conduct surveys and we used to collect the data through annual survey of industries. Now, under the new methodology, we have shifted to a new system called as MCA 21, Ministry of Corporate Affairs 21. Now, what is this Ministry of Corporate Affairs 21? MCA 21 is a type of e-governance initiative. It is a type of e-governance initiative. That is, Government of India has identified around 5 lakh companies in India, and these 5 lakh companies will have to submit their production data. They themselves will have to submit their production data to the Government of India. Any problem with this? Please do let me know. Any problem with this? The coverage in ASI was limited. It was somewhere around 2 lakh companies. Now we have extended it to more than 5 lakh companies. And many of you ask me, sir, what is the use of this? Right? What is the use of this? The reason is simple. Imagine you are the Government of India. You want to calculate what is the value of goods and services produced in India. Now, please tell me, is it possible for you to go to every company to collect the data? That's not possible. Rather than that, does it make sense when you tell companies, right, you tell me what is the value of production you have done? Submit the data in the portal or website. That is basically MCA 21 database. Right? Both are types of surveys only. One is ASI, Annual Survey of Industries. Second one is MCA 21. 21 basically stands for 21st century. This is what was told by minister when the portal was launched. Okay, that is the basic idea. Any difficulty? Now, don't try to find problems with this. Don't say, sir, what if they submit wrong data? My dear, this problem is always there. But please tell me, right, if you submit a wrong data, if you're caught, can your license be cancelled? Can you be penalized? Can it be considered as a fraud, etc., etc.? Don't basically say, right, sir, this is a problem, this is a problem, that's a problem. You're going to become a bureaucrat, right? So please understand. Okay, so this is the second important point. Third one, shifted from the cost price to the market price. Shifted from the cost price to the market price. Now, what is this cost price? Factor cost, right? And subsidies were generally considered earlier, right? Factor cost and subsidies were considered earlier. Now we are considering market prices. Now, what is the basic difference between this, right? The cost price and the market price. Now, think of this very carefully. Right? Think of this very carefully. Do you remember that statement that I gave, right, yesterday or day for yesterday, where I said the taxes will increase the market price of the product, whereas the subsidies will reduce the market price of the product? Anybody has a problem? Day for yesterday, FAME initiative. I'll repeat it again. The taxes imposed by the government, on a product will increase the market price of the product, and the subsidies will reduce the market price of the product. Now, what is the basic idea here? Earlier, what we used to do is, we used to simply consider the cost price, right? That is basically sum total of factor cost. In fact, subsidies were also counted earlier. Now, what is this idea? right? A company will purchase factors of production, correct? A company will purchase factors of production. Anybody has a problem with this? Company will purchase factors of production. And whenever they purchase factors of production, they will incur expenditure on this. They will incur expenditure on this. I'll call the sum total of all of this as a factor cost. I'll call the sum total of all of this as factor cost. Now, factor cost is taken. Have a look at this. Factor cost is taken, and can I simply say the subsidies given by the government, subsidies given by the government will reduce the price. Anybody has a problem? Subsidies given by the government will reduce the price of the product. This was generally considered as, right, understand this, the cost price. This was earlier considered as a cost price. But what government now says is, in addition to the factor cost and subsidies, we will also add the taxes. We will also add the taxes. This will give us market prices. This will simply give us market prices. And now GDP will be calculated using market prices. Any problem? Why they have shifted? I'll tell you now. In 1990s, United Nations, have you heard of this? United Nations, introduced a new system of calculation, very famous, known by the name of Systems of National Accounts. Systems of National Accounts. SNA, Systems of National Accounts. I repeat, why Government of India has shifted? I'm telling you. Right? Earlier we used to calculate GDP using the cost prices. Now, what we have done is from 2015 we have shifted to a new methodology which was introduced by United Nations a long time ago, right? Many decades ago, which is referred to as a systems of national accounts. And under the SNA, systems of national accounts, it says that from one country to another country, right, to make a comparison, we should calculate GDP through market prices. And many countries around the world, especially developed countries such as USA, Britain, etc., they already have adopted this model where they are calculating GDP through market prices. They already have adopted this model. Now we have adopted this model very, very recently. Right? That is from 2015, just to ensure that our methodology is on par with global standards. Whatever methodology we are using, we want to ensure it is also the same as what is used in the global market. We have shifted from the factor cost, or let's say the cost price method, to the market prices. Any difficulty here? Please do let me know. Factor cost includes all the expenditures incurred by the manufacturers to produce a good. Market price is the price paid by the customers when they will purchase the good. How do we move from the factor cost to the market price? We will take the factor cost, subtract subsidies, add taxes, and there is a term called as indirect taxes. Please do not worry about it today. When I take up taxation, promise I'll discuss what do you mean by indirect taxes. Do not worry. Best example for indirect tax is GST, Goods and Services Tax. All of you will agree? GST, right? Everybody has paid GST. Anybody in the classroom who says, sir, I've never paid GST in my life? Right? Anybody is there? Please do let me know. Right? Because if you have purchased a packet of biscuit, you have purchased the course, if you have purchased, right, a book, if you have purchased anything online, you would not know it, but you would have paid a GST. Right? So you are paying GST. GST is a type of indirect tax only. We'll discuss about GST later. Please do not worry. So argument is simple. Earlier cost price method was used. Now market price is used. Why? We want to make it uniform. We want to ensure we are also following the same method followed by global economies. Right? This is one more very important change. That is the third one. Fourth one, gross value addition methodology. right? We are calculating gross value addition, GVA. Now, what is this idea for GVA? Let me start with a very simple example. Start with a very simple example, right? I'm taking one industry here. One industry I'm taking, right? And what is the right basic argument here? The first step, right? I'll write it here. Step one is, right? A company will mine. Mine means dig. Okay. The company will mine out a ore, sell it to a steel production company. Let's say this is company A. Company A will sell iron ore to company B. Now, simple question to all of you. Simple question. Is company A using any raw material to dig out iron ore? Think of it, right? Think of it. Is company A using any raw material? Some of you are saying yes. No, my dear. Company A is using capital. They are not using any raw material. Can you understand my point here? Company A is using machinery. Machinery is not raw material. Machinery is a capital good. Any problem here? Please do let me know. Any problem? Anybody has any issue here? Answer is no. Company A is not using any raw material. No raw material. Right? They are not using any raw material. Sir, what about the land? My dear, whatever money they will charge to company B, don't you think that is because of land only? Think of it. Whatever charges they will impose on company B, don't you think that is because of land, because of human resource, etc., because of capital machinery? So I hope you understand, company A is not producing or is not using any raw material. It will basically, right, mine out iron ore and sell it to B. And now company B, think of it, company B will use the iron ore, produce steel, sell it to company C. Now, can I say company B is using raw material? Let me know. Company B is using raw material. What is raw material? Right? Raw material is anything that is used, converted, and sold in the market. Value addition. Do you remember the concept of value addition that we have discussed yesterday? Right? So, company B is using raw material, that is nothing but iron ore, producing steel, selling it to company C. Company C will use the steel, convert them into utensils. Can you see examples of utensils here? They have converted that steel sheet into a plate. They have converted the steel sheet into a glass, etc. Now, company will sell it to a customer in the market. A customer in the market. Now, can I say company C is using raw material? Any problem here? Company C is using raw material. Now, many of you are asking, what do you mean by raw material? Raw material means anything that you purchase, process it. Simple idea. Anything that you purchase, process it, and sell it in the market. For example, imagine you're a manufacturer of, let's say, a mobile phone, or let's say this remote control. You're manufacturer of a remote control. Now, can I say to manufacture remote control, you will purchase plastic. You'll purchase a plastic. You'll process a plastic and sell it in the market. Process means convert plastic into another form. Now, many of you are saying, what about fuel? What about this? What about that? My dear, please understand. This company A will sell iron ore to company B. Do you think they are purchasing fuel, processing fuel here? Simple argument. Do you think they are purchasing fuel and converting fuel here? No. Don't confuse everything like this. Don't get confused. Raw material means you purchase something, process it into something else, sell it in the market. That is called as raw material. Now, is the logic okay with you? Can I say company B is using raw material, company C is using raw material? And have a look at this. Next important point. Right? Don't you think every company, take for example, company A, company B, and company C, can I say all the companies are adding certain value to the economy? Is it okay? Right? All the companies, company A, company B and company C, all of them are adding value. Adding value means what? They are using something, producing and selling. But the argument is the market price at which they are selling is higher than whatever they are using. Whatever input they are using, the market price is greater than the value of the input. That is basically the argument of value addition. Now, many philosophies are give numbers. Give numbers, right? What is the meaning of value addition? Tell me the numbers. Let's take a simple calculation here. Value addition simply refers to, have a look at this, right? What is the addition done to the system by producing a unit of raw material or services which are used as intermediary goods or inputs in the whole production supply chain. Now, I'll take the same example. Let's imagine company A will produce iron ore, will mine out iron ore, sell it to company B. No raw material is used by company A, so value of raw material is 0 rupees and market price of, let's say, the iron ore is 10 rupee. Now, can I simply say company A has added value of 10 rupee to the economy? Value of 10 rupee to the economy. Now, come to the company B. Company B has purchased raw material worth 10 rupee. So, intermediary good will be 10 rupee. They will process the iron ore, convert that into steel, sell it to company C. And they will sell it, let's say, at 30 rupees. So, value of raw material is 10 and the market price of a final good that they've sold to company C is 30 rupee. Now, can I say the value addition done by company B will be 20 rupees? Come to the example C here, or manufacturer C. C will purchase raw material, that is intermediary good, steel sheet at 30, convert that into utensil, sell it in the market at 50. What is the value of value addition done by company C here? Company C does value addition of 20 rupees. Now, simple argument here. Government will ask company A to submit the data, company B to submit the data, company C to submit the data. They will ask every one of these companies to submit the data. Please tell me, using this, can Government of India come to know how much is the total value addition done by these companies in the steel sector? Let me know. Can Government of India simply calculate, and when I say Government of India here, NSO, National Statistical Office. Can NSO find out how much is the total value addition done by all the companies, right, in the steel sector? That is, they will simply calculate 10 rupee, 20 rupee and 20 rupee. Total value addition will be 50 rupees. Any problem in understanding how gross value addition is calculated? Gross means total. Now, if I'm doing this for steel sector, can I do it for textile sector? Can we do the same thing for textile sector? Can we do this for shipbuilding sector? Let me know. Basic idea now. Can we do this for every sector in the economy? Of course, yes. So now can I calculate? Now can I calculate the total value addition done will be done by all of them, right? How much will be the value addition? Of course, yes. Right. So this is why they will ask the companies to submit data, use the data to calculate GDP. Any problem here? Any problem? Please do let me know. Right, there is one question, is the market price greater than value addition? Yes, I'll come to that. Just give me some time. Right, it will take some more time for me to come to the final, right, formula. The last formula, I'll tell you how do they use value addition, how do they arrive at market prices. I will tell you, don't worry. And there is very interesting question. What is intermediary good? My dear, right, what is the meaning of intermediary good? Any input that you use, any raw material that you use, convert it, process it, sell it in the market. That is basically company B will use a raw material. What is a raw material? Iron ore. Simple. Iron ore will be the raw material here. Company C will use a raw material input. What is the raw material here? Raw material basically is a steel sheet. Done? Right? So this is basically how gross value addition is calculated. Is value added can be defined as profit. Profit is part of it. Profit is part of it, not all of it. Profit is part of it. Okay? Done? So this is basically the concept of value addition, right? Once again, the idea of a value addition. Now, these are the four very important points. Any problem in anything, right, that we have discussed? First one I have not discussed. Have patience, we'll discuss it later. Trust me, I will not leave it. We'll discuss it. Right, so base year has been changed from 0405 to 11 and 12. Second, the coverage. Coverage means industry data collection. Industry data collection. Earlier, right, we used to do it through annual survey of industries. Now, we have set up a new portal or a website, MCA 21. Through MCA 21, we are collecting production data. Third one, earlier we used to use, right, the cost price method. Now, we are using market price method. And the fourth one, we also calculate gross value addition now. We are also using gross value addition, right? And again, some of you will ask, sir, why? What is the use of the gross value addition method? Right? What is the use of the gross value addition method? Now, please tell me, by using gross value addition method, are we not eliminating double counting? Think of it and please do let me know. Right? Using gross value addition method, are we not avoiding double counting in the economy? Otherwise, what would happen? Please understand. Imagine the government will simply collect the market price of company A. What is the value of goods and services produced by company A? Company A will tell them 10 rupee. Company B will tell them 20 rupee. And company C will tell them, right, let's say, 30 rupee, and company C will tell them 50 rupee. So if government will count 10 rupee, 30 rupee, 50 rupee, right, the value of GDP will be how much? Here itself, the value of GDP will become simply 90 rupees. But the problem is, what was produced by A was used by B. What was produced by B was consumed by C to produce something else. So are we not double counting, triple counting the same value again and again? So using gross value addition, we will eliminate the double counting issue in the economy. Any problem here? Any problem? Can we go forward? Arey Baba, taxes, have patience, no? Right? I'm telling you, we'll discuss taxes. Right? Have patience. You should have always patience. Don't keep on saying taxes, taxes, taxes. Why? Listen to me. We'll discuss. Have patience. Okay. Next. Right? What are other important concepts? Now I'll throw taxes at you. Right? So many times you're asking taxes. No, I'll add taxes now. Have patience. Look at this very carefully. Let me explain this. Follow this very carefully. Imagine you're manufacturing this remote control. Okay, imagine you're manufacturing this remote control. So to manufacture this remote control, you will purchase a piece of land. To manufacture this remote control, you will purchase a piece of land. Now, please tell me, when you will purchase a piece of land to set up a manufacturing facility, will you pay taxes on this land? Let me know. Will you pay taxes on this land? You will have to pay, or you must pay. Government will ensure you will pay the taxes. Sir, what is the tax here? Have you heard of stamp duties? Let me know. Have you heard of stamp duties? Right, that is, whenever you will register the land, certain amount of taxes will be collected by the government. Okay, certain amount of taxes will be collected. Point number one. Point number two, and answer this as well. The amount of taxes you pay here, is it related to the volume of production you are doing? Answer this. Think and answer. Please think and answer. The amount of taxes that you are paying when you purchase a land, is it connected? Is it dependent upon the volume of production you are doing? How many goods you will produce? Is it dependent on that? No. Some of you are saying don't know. Answer is no. Why? Right? Some of you are saying yes. Right? Wrong, my dear. Wrong. Whatever quantity you produce, that does not determine how much taxes you pay here. If you know about stamp duties, if you have, right, if you don't know, please ask your parents who have purchased land. The amount of taxes that you pay in the form of stamp duties, it is dependent on value of the land. It is based on value of the land. It is not based on how many goods you are producing. No, it is based on value of the land. Now, can I go to the point number 3 here? Right? What is point number 3? When you manufacture a product and sell it in the market, should you include these stamp duties also in market prices? Think of it. When you manufacture a product, are some of you saying no? Wrong. Think, my dear, think. When you're manufacturing a product and selling it in the market, should you also include how much taxes you're paying in the form of stamp duties? Answer should be yes. Some of you saying not necessary. Some of you saying no, I will not include. Then my question to you is this. Why are you purchasing the land? Tell me, why are you purchasing the land? To manufacture a product? And when you manufacture a product, are you consuming the product or is the customer consuming the product? Think of it, right? When you manufacture a product, are you consuming the product or is the customer consuming the product? Customer. Now, if the customer is consuming the product, don't you think whatever taxes that you pay, because to produce the good, you'll have to collect it from customer? Does it make sense to you or not? Please do let me know. Does it make sense to you? Whatever taxes you pay related to production, related to producing a good or supplying a good, ultimately the customer has to pay it. You don't pay. If you pay, my dear, you're going to incur a loss. Right? If you pay, you're going to incur a loss. So please be very careful. Right? I'll give you one more example. Imagine to manufacture this remote control, right? Or else this remote control. To manufacture this remote control, you will import plastic. And when you import plastic, government will impose a tax on it. All of you know this, right? When you import this plastic, government will impose a tax on it. Now, who should pay the tax? Ultimately, who should be paying that tax? Customer should be paying the tax. And some of you are asking, how will customer pay the tax? My dear, you import plastic, you pay it today. You pay it now. But when you sell this remote control to the customer, in the market price, add that tax as well. Does it make sense now? That some of you are saying, sir, how can I collect from the customer? I don't know who is the customer. Valid. But can I say, you pay, let's say, 10 rupees today in the form of tax. But when you're selling this product to the customer, in the market price, you add that tax. Simple argument. Okay? Right? Now, please tell me, is it okay with all of you? In this example, that is example 1, the taxes that you have paid is independent of volume of goods that you're producing. I'm giving a statement. The taxes that you have paid is independent of volume of production that you're doing. Now let me take a second example. Imagine you will manufacture this remote control. You will sell it in the market. Government says for every one remote control, we will collect a tax of 10 rupee. For every one remote control that you sell, we'll collect 10 rupee. Now, please tell me, this tax of 10 rupee, example GST, this tax of 10 rupee, can I say, is directly connected to volume of production that you're doing? Please do let me know. This example, second example, the tax that government is imposing and collecting, is it related to the quantity or volume of production that you're doing? Now, is the logic okay? Some of the taxes that you pay as a producer is independent of volume of production, and some of the taxes that you pay, collect from the customer and you pay, are connected to the volume of production. How? You produce one remote control, sell it. How much tax you will collect? Tell me. You produce one remote control, sell it. How much tax you will collect? 10 rupee. You will produce two remote controls, sell it. How much tax you will collect? 20. Right? At least now, is it okay? You produce 10 remote controls, sell it in the market. How much tax you will collect? 100 rupee. So as the volume of production is changing, can I also say taxes amount is changing? That is basically the argument. So one example not connected to volume. Second example connected to volume. Sir, why are you discussing all of this so much? Simple, right? Understand now. Many of you are saying, no, sir, taxes. How taxes are accounted? Tell me, tell me. Understand. There are certain taxes which are imposed, which are called as production taxes. And please remember this, production taxes are independent of volume of any goods produced. Production taxes are independent of volume of goods produced. And product taxes are right imposed and collected on per unit, which means these are dependent on volume of goods produced. Any difficulty now? Please do let me know. Some of you are saying, sir, you are not writing what you are saying in statement. Is it there in the statement here? Production taxes are independent of volume of goods produced, and product taxes are dependent on volume of goods produced. These are two types of taxes. How do we use them? Have patience. I need to discuss two more types. That is subsidy. That is subsidy. Now, I'll give you two examples here. I'll give you two examples. Right? Understand this. Imagine you're producing a particular good. Imagine you're producing a particular good. Now, in one example, government will give you simply subsidy. For example, let's say, imagine you're setting up a manufacturing facility. Right? You're setting up a manufacturing facility. Government says, because you're establishing a manufacturing facility, it will create employment in India. It will lead to higher investment in India. I will give you a subsidy of 1 crore rupees. Simple, right? Because you are creating employment, because you are right promoting investment, you are making lot of investment, etc. Right? I'll give you 1 crore rupee subsidy. Please take it. Example, right? Number 3. Fourth example here. I'll take the example of FAME initiative. I'll take the example of FAME initiative. Now, please tell me, in FAME initiative, Government of India will provide the subsidies on per unit, per electric vehicle produced or not? Think of it. We have discussed all of this, by the way. Under the FAME initiative, imagine you produce an electric vehicle, price is 1.5 lakh rupees. Government will give on this one vehicle produced a subsidy of, let's say, 20,000 rupees, which means the price of this vehicle in the market will come down to 1.3 lakh. Now look at example 3 and example 4. Can I say example 4, it is the subsidy given by the government which is dependent on volume of production that you are doing. Example 4 is the subsidy which is dependent on volume of production you are doing. And example 3, they will simply give you subsidy. The amount of subsidy given, it is not dependent on volume of production. Any difficulty here? Let me know. Any difficulty? Example 3, subsidy given independent of volume of production. And example 4, it is dependent on right the volume of production. For example 3, I'll repeat it. And I'll repeat it. Argument is simple. Focus on one point. Whether the taxes you pay or subsidies you get, is it dependent or independent of volume of production? Focus only on that. Don't waste your time on unnecessary things. Focus only on that. That is basically in the third example I said, Imagine you decide to invest 100 crore rupees in India. Right? Decided to invest 100 crore rupees in India. And government says, I want you to invest. Right? So what I'll do is, I will give you a subsidy of 1 crore rupees. I'll give you a subsidy of 1 crore rupees. Now this 1 crore rupee, the subsidy that you're getting, is it connected to volume of production? Let me know. Is it connected to volume of production? Absolutely no. Is it dependent? Are some of us saying yes? I don't know how to tell you now. I'm saying government wants you to invest, so simply government will give you 1 crore rupee subsidy. Is it dependent on how many goods you're producing? No. Did I basically make a connection? Absolutely no. But even then, yes sir, it is connected to the lecture carefully. You're not listening. So in this example, it is not at all dependent. It is not at all dependent on volume of production. It is independent of volume of production. Right? That is the reason that basically the third one I said it is independent and fourth one is dependent. Okay. Now, right, whenever you are talking about these kind of subsidies which are independent of volume of production, these are called as production subsidies. These are referred to as production subsidies. For example, there are subsidies provided in railways or transportation. Right? We'll understand that also. When I take up railways, I'll tell you, in railways, lot of subsidies are provided. Many of you will ask, sir, how? How railways will provide subsidies in India? My dear, please understand this. In railways, right? In railways, if the cost of transportation is, let's say, 5 rupees per kilometer, railways will never charge you 5 rupees. It will charge less than 5 rupees. All of you will agree? Let me know. In railways, how railway subsidies are provided, right? The government ensures that the cost that you pay in railways is never the market price. It is always less than the market price. It is basically the idea of a subsidy only. Right? So input subsidies given to the farmers, subsidies given to the small industries, subsidies given to various companies, right? And later when we keep on discussing, I will give you a lot of examples of these kind of subsidies. Please don't worry. Please don't worry about subsidies now. So whenever subsidies are provided, which are independent of production value, that is called as production subsidy, and which are dependent on the product, number of products that you're manufacturing, that is called as product subsidies. So any problem, please do let me know. I'll write the same numbers so that when you look at the examples later, you will know what you're talking about. 3 and 4. Same examples I've given. Can I go forward? Any problem? Can I go forward? PLA incentive. What is PLA incentive? Please do let me know what is PLA incentive. Second point, my dear, do not complicate it. Do not complicate it. Please understand. Point number 1, taxes are imposed and collected by the government. Is the logic okay with you? Taxes are imposed and collected by the government. Now, question is whether this tax is dependent on volume of production or independent of volume of production. If it is a dependent on the volume of production, that will be called as product taxes. If it is independent of volume of production, it is called as production taxes. And second, production subsidies and product subsidies apply the same logic. Do not change, apply the same logic, but only difference is taxes you pay to the government, subsidies you receive from the government. Taxes you pay to the government, subsidies you receive from the government. And whenever you receive a subsidy, it is dependent on volume of production. We'll call it as a product subsidy. And whenever you receive subsidy, it is independent of volume of production. It is called as a production subsidy. That is a basic idea. Do not complicate it. Even if you have not understood examples, leave it. Can you understand at least this much? Dependent or independent? Dependent product, independent product, dependent product, independent production. That's it. Okay, do not complicate it. Please do not complicate it. None of the books have given this. Please check it if you don't trust me. None of the books have given all of this information. I've been discussing this for last 5 years because 2015 this was introduced by the government. Okay. Arey Baba, don't worry about subsidies now. Some of you are going, sir, this is right. What kind of subsidy? Right. Let me cover subsidies separately. Don't worry, this is a third class. You want everything in economy to be discussed today itself. That is not rational. Please have patience. Let's start. Next concept is basic price. Right? Next concept is basic price. Now, what is this basic price? Right? Let me give you a definition. None of the books, right? I'm sorry. None of the books have given any kind of definition related to this, but government documents say this is the basic price. Let me explain. The basic price means it is the amount receivable by the producer from the buyer in the market for a unit of good or a service produced as a output minus any tax payable plus any subsidy receivable. This is the definition given by Government of India. Let me explain. Follow the discussion carefully. Generally, what happens is, this is the kind of calculation they will use. We will start with factor cost. Then we will start with the factor cost. Now, all of you know, we need to calculate GDP through market prices. Please do let me know at least now. All of you will agree when I say GDP, now we are calculating using market prices. Any problem with that point? Any problem with that point? Argument is, we will reach market price. We need this much, right? We need this number to calculate GDP. But question is, how do we reach market prices? How do we reach market prices? We'll start from the factor cost. That is, if you're a manufacturer of this remote control, right? If you're a manufacturer of this remote control, those who are typing what is basic price, listen first. Listen first. You're not listening. I'm explaining that. Okay, listen. Right? Imagine you're manufacturing this remote control. Right? You will have to arrive at a market price of this remote control. You'll have to arrive at a market price of this remote control. So what we will do is, we'll start from the factor cost. You'll have to start from there only. You'll have to start from factor cost. Now, how do I move from the factor cost to the market prices? Right? What they will do is this kind of a calculation. They will add production taxes. They will add production taxes. Earlier, I've given one formula. I hope you remember this. Earlier formula was factor cost plus taxes minus subsidies. Do you remember this formula? Minus subsidies is equal to market price. This was the formula that I've given earlier. But this is a very simple formula. It is not technically correct. It's a very simple formula. How do they actually calculate? Listen now. Those who have been asking how taxes are accounted, how subsidies are accounted, I'll tell you now. Factor cost plus production taxes minus production subsidies minus production subsidies. They will say this is basic prices. This they will refer to as basic price. I'll tell you, I'll give you the definition of what is a basic price. Just give me 1 minute. Now they'll take this basic price. To this basic price, they will add product taxes and subtract product subsidies, and they'll simply say, using this, we will get market prices. We will get market prices. This is formula 1. This is formula 2. Now, please understand what is the basic price. These are the two formulas. What is the basic price? Let me explain. Basic price is the price that should be receivable, or that is receivable for the manufacturer. I'll repeat the statement. The basic price is the price, okay? It is the price that is receivable by the manufacturer after adjusting for product taxes and product subsidies. I'll repeat it again and I'll tell you how do they arrive at it. The basic price is the price that is receivable for the manufacturer after adjusting. Adjusting means what? After taking care of the product taxes as well as product subsidies. Sir, what do you mean by this? Let's start. Follow this very carefully. Imagine you want to manufacture this remote control. Only one product, let's simplify it. Imagine you want to manufacture this remote control. Now, simple question to you people, right? When you want to manufacture and sell it in the market, should you receive, I repeat, should you receive production taxes from the customer? Tell me, should you collect production taxes from the customer that you already have paid to the government? Some of you are saying no. Very, very bad. Very, very bad. Why? Did I not explain this? Please tell me no. Did I not explain this? If I have not explained, please do let me know. That will be a mistake on my part. Did I not say that whatever production taxes you pay to the government, customer has to pay it? Think of it. Please think of it. You're manufacturing this remote control, selling it in the market. Should you not get this production taxes from the customer? Of course, yes, you should get it. But what if you already have received certain production subsidies? What you have already received certain production subsidies, should we not deduct it from the cost of manufacturing? Is it okay? Should we not subtract it from the cost of manufacturing? Of course, yes. Now, let me go to the next point. Imagine you sell it in the market at 120 rupees. Imagine you sell it in the market at 120 rupees. Follow this very carefully. And on this, government has given you a subsidy of 10 rupee and you have paid a tax of 20 rupees. Simple. Imagine you have paid a tax, that is you have collected a tax from the customer, GST of 20 rupee from the customer, given it to government. Of course, that is included in the market price. And you already have received a product subsidy, that is, let's say FAME initiative, right, of 10 rupee on this remote control. Now, what is the basic price now? Please tell me, what is the basic price? Can you calculate basic price using the second formula? Let me know. Can you calculate the basic price using the second formula? Right? Can I do it? Take this 20 rupee and 10 rupee and transfer it on the other side. So basic price is equal to, now look at the formula. I will not calculate, I'll simply write formula. 120 rupees. This is plus 20. If I transfer it on the other side, will it become minus 20? Let me know. Minus 20. And this is a minus 10. If I transfer it on the other side, will it become plus 10? Any problem with the formula here? Please do let me know. Any problem with the formula? Observe the formula. Now read the definition of basic prices. Please observe the formula. Having observed the formula, please read the definition of basic prices. Tell me now, is it okay? Right? Please make the observation and read the definition of basic prices. Anybody has a problem with the definition of basic prices? Tell me now. The basic price is the minimum price that is receivable for the manufacturer when they will sell the product in the market, right, after adjusting for the taxes as well as subsidies. Any problem? Any problem? Can I go forward here? Arey Baba, say yes or no. Your answer should be yes or no. What is factor cost? Factor cost basically, and those who are saying no, please tell me where is the problem. Where are you facing difficulty? Only then I can point it out. Right? What is basically the concept of factor cost? If you are a manufacturer, okay, You will use certain inputs. First class. First class. If you are a manufacturer, you are using certain inputs. And when you use inputs, you will pay money for the inputs. You will pay money for the inputs. And the argument is, whatever money you are paying for the inputs, you will take it as a factor cost. Right? That is the sum total of all of them. That is factor cost. Done? Arey Baba, it's not difficult. Right? I'm giving you formulas. This is the first formula. You arrive at a basic price. Now, many of you will start asking me, what is basic price? I'll tell you the definition. That's a reason. Right? I'll give you the second formula. Basic price is calculated this way. That is, you start with the factor cost. You start with the factor cost. You add the production taxes, subtract the production subsidies. Now, many of you will ask, sir, why are you doing the first formula? Right? That's the reason I said, imagine you're manufacturing this remote control and you're selling it in the market. Okay, imagine you're manufacturing this remote control, you're selling it in the market. My argument is, the basic price is nothing but the price that you should receive. You should receive by selling this product in the market after adjusting for taxes as well as subsidies. After adjusting for taxes and subsidies. And what is this taxes and subsidies? You have paid, right, a certain product tax. You will have to adjust for the product tax. You already have received certain product subsidy. You will have to adjust for product subsidy as well. How do I do that adjustment? Right, this is the formula for market prices. This is the formula for market prices. Now I'm saying, right, throw certain numbers. Throw certain numbers. Let's say market price is 120. Subsidies that you have received is 10 rupee. Product taxes is 20 rupee. Can I use these numbers to calculate the basic prices? To get the basic prices? Of course, yes. Right, what I've done, basic price is equal to, right, I've written market price. Some of you are saying, sir, here you're writing something, formula is something else. Observe, my dear, you're not observing. Can I write basic prices is equal to market price minus product tax plus product subsidy? Plus product subsidy. At least now it is clear. I hope you understand. At least now is it okay? That is basic price is equal to market price minus product tax plus product subsidies. Please see what is given in the definition here. It is the amount receivable by the producer from the purchaser for a unit of good or a service as output. Output is, that is market price minus any tax, that is a product tax, plus any product subsidy. That is what is given in the formula as well. Any problem now? Any problem? Some of you are asking, sir, what is the use of first formula? My dear, understand the logic. Earlier we used a very simplified formula. Earlier we used a very simplified formula, that is factor cost plus taxes minus subsidies is equal to market prices. But from 2015 we have introduced a new system. What is the new system? Subsidies are two types. Taxes are two types. I hope you understand. Subsidies, there are two types, and taxes, there are two types. Now we want to take care of both the types of subsidies as well as right, the taxes. And that is the precise reason in the first formula we will use all those taxes and subsidies which are independent of production. Independent of production, calculate basic prices, and then use the basic prices, calculate market prices. Can we go forward? Can we go for, do not complicate this issue. Keep it simple. Keep it simple. Do not complicate it. You don't have to do PhD here. For example, right, understand this. This is the kind of question which was asked by UPSC. And let me show it to you. This was the question asked by UPSC. Explain the difference between computing methodology of India's GDP before 2015 and after 2015. 150 words. Even if it was 250 words, Right? Please understand, we are discussing GDP for more than 1.5 hours, including yesterday. We have been discussing GDP for more than 1.5 hours. Don't you think you will have a data which is sufficient to write an essay on GDP now? Think of it. You are supposed to write in 150 or 250 words. Right? Don't you think even if you write, right? Understand, that's the reason I'm saying don't complicate all of this. Even if you write only this, how many words are there? How many words are there? Right? So think of it. Do not complicate it. Keep it always simple. What is the argument? As per the new methodology, right? As per the new methodology, we have introduced, right? We have introduced, right? The types of two types of taxes, two types of subsidies, and we want to account for all of them. And that is the reason we have introduced a concept of a basic price. What is basic price? It is the price that should be received by the manufacturer when the manufacturer will sell the product in the market. That is market price. When the manufacturer will sell the product in the market minus any product tax plus any product subsidy. That is basically the basic prices. Done? Now let me ask you a simple question. Right? And please understand, you have to remember these two formulas. By heart both of these formulas. By heart both of these formulas. Okay, now let me ask you a simple question. Should we calculate basic prices, right, for every company and add basic prices for every company and get GDP? Will that give you GDP? Think of it. Just think of it. Can we calculate basic prices for all the companies individually, get the sum total of the basic prices, then basically, or let's say calculate basic prices, or I'll give you example. Before you say, sir, very, very difficult. Imagine there are three companies, A, B, and C. Now, does it make sense to you? Please tell me. I will calculate basic prices for company A, then calculate market prices. I will calculate basic prices for company B, then calculate market prices. I will calculate basic prices for company C, then calculate market prices. Now, please answer to this question, right? Is it okay if I write, right, market price of goods produced by A plus market price of goods produced by B plus market prices of goods produced by C? Please tell me, will it give me GDP? Think of it. Will it give me GDP? Think very carefully. Please think very carefully. Right? What if I say A is a mining company? I'll take the earlier example. A is a mining company and B is a steel manufacturing company and C is a utensil manufacturing company. Let me know. Steel is used by company C to manufacture utensils. Now, is the formula correct? Market prices of all the goods produced by company A plus market prices of all the goods produced by company B plus market prices of all the goods produced by company C. Will it give me GDP number? Those who are saying yes, my dear, wrong. Why? What is the output of a company A? Don't you think that will be used as raw material in company B? We have discussed this already. Right? What is the output of company A? Don't you think that will be used as raw material of company B? And if you are counting market prices of goods and services produced by A plus B plus C, that is a double and triple counting. I hope you understand. So what we'll have to do now? Can we basically start with gross value addition then? Let me know. Can I calculate now? Think of this. Can I calculate gross value addition done by company A? Gross value addition done by company B? Gross value addition done by company C? And then use this to calculate market prices. Does it make sense now? Does it make sense or not? If you simply calculate market price using basic prices and get the sum, you are leading to double counting, triple counting. But rather than that, I will calculate gross value addition. Right? Gross value addition means whatever is the raw material cost, remove it, exclude it, which means, right, basically you will get market prices without any double counting for this. Okay, can I go forward now? Now look at the two formulas and tell me, is the formula okay with all of you? Right? Starting point is simple. Starting point is always factor cost. Starting point is always factor cost. So we will have to calculate how much is the gross value addition done, right? For factor cost, how much is the gross value addition done? To this, we will add production taxes and subtract production subsidies. What I get is gross value addition at basic prices. I'm using the same. I'm using the same formula. I'm not changing anything. Please understand this. Some of you will say, what is this formula now? I'm using the same thing, but only difference is, rather than counting factor cost for all the companies, then leading to double counting, what I will do is I will count it at gross value addition. I'll simply consider gross value addition, which means, right, if I want to give a very simple example here, right, rather than simply counting, right, the cost of raw materials, etc., I will use the GVA, gross value addition. Subtract how much is the value of raw material. That's a basic idea. Okay, right? So what is the first formula? Start with the gross value addition at factor cost. To that, add production taxes, subtract production subsidies. You will get gross value addition at basic prices. Now take gross value addition at basic prices, add product taxes, subtract product subsidies. You will get GDP at market prices. And have a look at this. There is no double counting anywhere here. Why? We are using gross value addition. And because we are using gross value addition, double counting will not be taken. Right? There is a elimination of double counting. Any problem with the formula? What is GV at factor cost? My dear, right? You're not listening. That's a problem. The company A has produced certain goods. Company A has produced certain goods or sold it to company B. Now, if I simply calculate basic prices of company B and add it to GDP number, that will lead to double counting. At least now, is it okay? Those who are saying what is GV at factor cost, tell me now. Right? If I take what is the basic price of a steel produced by company B and use it to calculate GDP, am I counting the product double times or not? Those who have a doubt right now, answer it. Otherwise, I'll go forward assuming you have understood. Let me know. If I take basic prices of company B and use it to calculate GDP, am I counting iron ore two times or not? Two times in the sense, company A has produced iron ore. They have given the data to government of India. And I have purchased iron ore. That is a raw material cost. I will include iron ore cost and give data to government of India. That is 30 rupees. But my dear, out of 30 rupees, 10 rupees is iron ore, which is already right counted by the government. So what I will do, I will calculate gross value addition. How do you calculate value addition done by company B? Right, value addition done by company B is the output price minus input price. That will be 20 rupees. Gross value addition done by company B will be 20 rupees. Any problem at least now? Any problem at least now? Sir, you are saying two taxes and two subsidies. So is that production taxes, subsidies, and product taxes? Of course, yes, my dear. Yes, that these are the two types of taxes, two types of subsidies. Any problem? Can I go forward? These are the two formulas. These are the two formulas. Please by heart them. This is my recommendation. These are the two formulas. Please by heart. Okay, done. So this is right, the GDP calculation. Now those students who are asking yesterday, sir, how taxes are accounted in the calculation? Tell me. How subsidies are accounted? Tell me. At least now you know how GDP will account taxes as well as subsidies. For example, yesterday the context was many students were asking me when I was discussing GDP through income method, GDP through income method and GDP through production method. GDP through income method and GDP through production method. I said here also factor cost will give you 100 rupee. Here also factor cost will give you 100 rupee. Many of the students were saying, sir, what about taxes here? What about subsidies here? Now please tell me, is the accounting okay with all of you? Is the accounting okay with all of you? How taxes are accounted, how subsidies are accounted, how government will use all of this data to calculate GDP. But going forward, please remember, I'll tell you one more point here, right? Do you think, understand this point very carefully, there are two methods. There are two methods. And going forward, when you read newspapers, observe it. Please make an observation. Generally, when the data is published for GDP, they will talk about production method. They do not mention income method. Observe it. I know many of you will not trust me, observe it, but they will talk about production method. They will talk about expenditure method. They will talk about expenditure method. They will not be talking anything about income method. They will not give you information regarding income method. I'll tell you why. Reason is, if you want to calculate GDP through income method, you need to collect factor incomes. All of you will agree? You need to collect factor incomes. That is how much everybody is earning. How much you are earning, how much I am earning, how much profits companies are making, right? How much rent people are earning. They will have to collect all the factor incomes. Now imagine I'm the government official. I'll come to your house. I will ask you for data regarding your income. Will you provide it to me? Think of it. Will you provide it to me? Honestly say that. Right? Answer to the question very, very honestly. Will you give whatever is your total income? What all source income? Will you be honest there? Again, you might simply say, yes, sir, I'm very honest. Right? I will provide all the data. But do you think everybody is as honest as you people? Think of that as well. Right? So argument is simple. It is very difficult to collect the data. Now, some of you will basically say, right, sir, we can go to the bank, collect the data from the bank, right? Balance we can check. There we will simply check how much income they are earning. There is one more complication there. Do you think everybody is going to earn the salary in the form of a payment to the bank account only? Think of it. In a country such as India, don't you think lot of the payments, lot of salaries and wages are paid directly in the form of cash? I hope you understand this. In that case, again, what will you do? So that is the reason generally the GDP calculation methodology, next time when you come across this, trust me, you will come across this, right? You will basically do not get information regarding GDP through income method, right? Basically, they will provide the GDP method, or let's say the GDP through production method as well as expenditure method. Okay, done. So these are the two things. Can we go forward? Can we go forward? Okay. Right, so this is how GDP is calculated. Now make an observation of this question. Do not worry about this question. Just observe this question. Right, one point is left out. IIP. I have not discussed IIP. Trust me, we'll discuss later. IIP simply stands for Index of Industrial Production. And base year I have not yet discussed. We'll discuss even the concept of base year. Do not be worried about it. Can you answer the question now? Assuming we have discussed both IIP as well as base year. Can you answer this question now? Last year it was asked. Explain the difference between the computing methodology of India's gross domestic product before 2015 and after 2015. Right? You can check the papers. So this was asked last year. Okay. Right. So again, if you ask me, these kind of questions are static questions. Very, very simple static questions. You should not make a mistake here. You should never make a mistake in these kind of static questions, because to get static questions itself is very difficult in UPSC mains. Very difficult to get static questions in UPSC mains. If you get them, you should not make a mistake. In fact, when you will see the questions later on, right? We'll discuss a lot of these questions, mains based questions. Many of the times, the kind of questions UPSC will ask, right, are basically from current affairs, and you will be wondering, why is he asking this question? What does the question actually mean? And in that situation, to get a static question, right, it's like a free hit in cricket. It is like a free hit, right? Do not miss out on these free hits. You will have to score very good here. Okay, so this is basically the structure. Write introduction, write the introduction, right? Then make a comparison. Although I've given in types of in pointer form, I would recommend that you write in passages, write in paragraphs, because you are writing in point simply means you have by hearted. Simple argument. Imagine you are the evaluator. You will get an answer sheet of a student. He has given points like this, point by point. Right? Will the first impression be this or not? You will realize that the student has by hearted and written the answer. Rather than that, if you write intro first, write intro, right? What is the intro? GDP, gross domestic product. In this, government, that is NSO, introduced a new methodology starting from 2015. Then come to the main body. What should be in the main body? Right? Basically, first point. Don't write number one, number two like this. Go passage wise. Point number one. Earlier, to calculate GDP, we used to use a factor cost method. But as per the recommendations of the SNA, Systems of National Accounts, we have shifted to the market price methodology. You can write the formula below that. Come to the second point. Earlier, we used to calculate the production data. We used to collect the production data through annual survey of industries, but under the new methodology, it will be like this. So write in paragraphs, you will get better marks. Can we go forward now? Any issue with the question? Do not worry about IIP. Despite saying that, right, again you're asking questions on IIP. Do not worry about IIP. Please trust me. When I say I'll discuss that, trust me, I'll discuss that. If you don't trust me, keep a note. Wherever I've written will be discussed later, keep a note. And after the 24th class is over, if I have left out any of the points, please point it out to me. I'll be very happy. Please point it to me. Okay, now, next. Some of the items that are excluded in the calculation. Some of the items which are not included in the calculation are: one, services of the housewives. Services of the housewives. Right? Why services of the housewives are not considered? Argument is simple. Services of the housewives, right, is not paid. Whatever services are provided by the housewives, the money is not paid for them. That is a precise reason, right? We cannot count whatever is the services provided by the housewives. Any problem with the first one? Let me know. Any problem with the first one here? Right? What is the argument here? I'll give a very simple example. Imagine you are sitting and listening to economics classes, right? Your spouse or your mother will come and hand over a cup of tea to you. Will you pay money for them? Will you take out purse and pay money? Right? Try to do that. Then imagine how much will be your expenditure on day-to-day basis. Right? So the services which are provided in the household by the housewives, we do not pay money. We do not monetize them. Monetize means a value. We do not provide any value to that. That is the reason it is not counted. Black money is also not counted. What do you mean by black money here? Black money is unaccounted money. Unaccounted simply means government does not know what is the source of it. Simple. Government does not know what is the source of it. And because government does not know what is the source, whether you have a black money or not, how much black money you have, government doesn't know it. Hence, taxes on this unaccounted money is also not paid. Right? So because the money is not accounted, black money is generally not counted in the calculation of GDP. Any problem with this? Please do let me know. Any problem with this? Right? Black money is also not accounted in the calculation of GDP. And black money is also referred to as one more term, parallel economy. Please remember this. It is also referred to as parallel economy. Right? What is a parallel economy? Let me give a very simple example here. Right? Have a look at this. This is 100 rupee that I'm showing to you. Please tell me, what do you think? Whether this 100 rupee is white money or black money? Let me see. Right? Can anybody in the classroom say whether this 100 rupees white money or black money conclusively? Conclusively. Conclusively means without any doubt. Can you conclusively say whether this is white or black? Absolutely no. You cannot tell me. Why? Do you know what is the source of it? Think of it. What is the source of it? No. But what if I say This 100 rupee is part of my salary. Now you will ask me, what is the proof of that? I will give you a bank statement. I will give you a bank statement which says, in this month, I have received a salary of X rupees, and today morning, I have withdrawn 100 rupee from the ATM. So I'm showing you 100 rupees. Proof of it is there. And on the salary, I've paid the taxes. Now, please tell me, right? Is this white? Of course, yes. I hope you understand this, right? So for government to find out whether this is white or black, most of the times it will work out when there is a documentation. But I hope you understand this, right? In case of India, lot of transactions keep on happening in the form of cash. Lot of these transactions keep on happening in the form of a cash. And that is the reason it is very difficult for the government to find out whatever money you are spending in the market, right? Is it white money? Is it black money? Etc. etc. So that is the reason generally black money is not accounted when you're calculating, right? Calculating the GDP number. Now, why it is also referred as parallel economy? Please understand, right? Please understand. If it is white money, can I take this 100 rupee, go to the market, purchase breakfast, buy breakfast? Let me know. This is white money. Can I go to a restaurant, purchase or buy breakfast? Yes. If it is black money, can I go to the market, purchase same breakfast? Think of it. Does it make sense? Of course, yes. Right? Are some of you saying no? How? Why do you people say no? If this is black money, right? Do you think the restaurant owner knows this is white or black? Or even if he knows, do you think it makes any difference to the restaurant owner? It doesn't make any difference. I will take the same 100 rupee black money. I will go to the restaurant, pay 100 rupee, buy breakfast. So understand this, in the economy, the white money as well as black money will get circulated parallelly. Do you understand why this is called as parallel economy? In the economy, right, the white money as well as black money, both can be used. Both will get circulated parallelly like this. There is no difference. And please understand, some of you are under the impression that black money means color is black. No, color is not black. The money is unaccounted. That is the reason it is called as black money. Now, please tell me, can I say whether this is white or black? Does not matter. Both will get circulated, right, in the same way in the economy. Right? That is the reason black money is also referred to as parallel economy. Right? Black money is also referred to as parallel economy. Right? Both will get circulated. Right? There is no difference. Third one, transfer payments. Third one is transfer payments. Transfer payments means money is paid. Money is paid, and in return, no good or a service is exchanged. No good or a service is exchanged. That is basically referred to as transfer payment, or else there is one more name for this: one-sided payments. One-sided payments. One-sided payments are also referred to as, right, a transfer payment. Let me give you a very simple example. Government of India will provide, right, subsidy to the farmer. Think of it. Government of India will provide a subsidy to the farmer. Right? Do you think in return government is purchasing something from the farmer? Think of it. Or let's say there are poor people in the economy. Of course, yes, there are poor people. You don't have to imagine. There are poor people in the economy. Government will provide certain welfare payment for this population. Welfare payment to this population. Do you think government will be collecting certain goods and services from the poor people? So I hope you understand this. Whenever there are certain payments, one-sided payments, that's very important. One-sided means money is given, in return no good or service is taken. Right? These are called as transfer payments. Transfer payments are also not accounted in the calculation of GDP. They are also not counted in the calculation of GDP. Fourth point, old goods which are resold. Old goods which are resold in the economy. What do you mean by this? Let me take a very simple example. 2023. 2023. Imagine you have lot of money. You'll purchase a Benz car. Be happy. You are a millionaire now. Be happy. Right? 2023. Today you have purchased a Benz car. Now please tell me, when you purchase the Benz car, new one by the way, right? You have lot of money. New one. When you purchase this Benz car, can I say this is already accounted in the GDP of 2023? Let me know. Can I say this is already accounted? Accounted means counted when GDP for 2023 is calculated. Answer is yes. Now, after 2 years, 2025, after 2 years, right, you are bored with Benz. You are bored with the Benz car. Right, you are saying, sir, I have so much amount of money, I don't know where to spend. Now I want to purchase a Rolls Royce. I want to purchase a Rolls Royce. Now what you will do? You will sell the Benz car in 2025 and you will purchase a new Rolls Royce car. Now, simple question to you. When you will sell the Benz car in 2025, of course, you will get certain money for it. Should you count the value of Benz car in the calculation of 2025 again? Let me know. Should you count the Benz car market price again in GDP 2025? No, you should not count it. Why? The value of Benz car has already been counted in GDP for 2023. If you count it again, same argument, it will lead to double counting. It will lead to double counting. Done. So these are basically certain things that you'll have to exclude when you're calculating GDP. Of course, are there many more things? Of course, yes. For example, please tell me, right, raw material. Will you count raw material prices in the calculation of GDP? Will you keep on counting raw material or input cost at every stages in the calculation of GDP? Of course, you know. What about the goods which are produced for self-consumption? That is very important. Goods which are produced for self-consumption. Specifically, have a look at this. Farmer. The best example for this is a farmer. A farmer will produce, let's say, 100 kg of rice. I'll take a very simple example. A farmer will produce, let's say, 100 kg of rice. Do you think the farmer will sell all the 100 kg rice in the market? Think of it. Right? Do you think the farmer will sell all the 100 kgs in the market? No. Don't you think some of this, let's say 10 kgs, the farmer will use it in the same house? So out of 100 kg, only 10 kg is used in the house and remaining 90 is sold in the market, which means market price of this 10 kg. Will you count it? No, it is already used. It is not sold in the market. So there are various exceptions, right? Exceptions whenever, right, GDP has to be calculated. Can we go forward here? Now, before I go forward, right, because I use the term rice here, I use the example of rice. Please read today's newspaper. Please read today's newspaper. I was able to read one newspaper today in the morning, Hindu newspaper. Very good articles are there in today's Hindu newspaper. For example, rice, right? Government of India, right? A couple of days ago, have you read about this article? Government of India has banned export of rice to the international market. Let me know. Let me check how many of you are reading newspapers. Government of India has banned export of rice to the international market. Not all the time, some of the types of rice. Right? What is the impact of that? IMF, right, yesterday has given a statement on that, and today's Hindu newspaper, there is an article on that. Right? Hindu newspaper, there's an article on that. Please read that article. Very nice article. Central page article is there, right? Please read that also, right? The very big article, the open editorials. Please read that. That is on economics. In addition to that, yesterday's newspaper, how many of you were able to read on the article on Rajasthan bill, the gig economy bill or gig worker bill? How many of you were able to read it? Please read that article. Right, in yesterday, all the newspapers, not just Hindu, all the newspapers, right? That was there in the Hindu newspaper. In fact, two articles were there yesterday in Hindu on Rajasthan gig worker bill. And today there is one more article. Please read that. The editorial, right? Open editorial is on Rajasthan worker bill only. Please read that article. That's important. Again, some of you will have a doubt, sir, what you mean by gig worker, right, etc., etc. Don't worry, we'll cover all of it, right? But what I would recommend is, right, some of you might not understand certain concepts given in the article. Doesn't matter, read it. Otherwise, right, have a clipping of that. Later, when we discuss the concept of a gig economy, what are the advantages, what are the disadvantages, etc., etc. Now take up the Rajasthan bill and start reading it, right? Because this is important. Why? I'll tell you. This is important because it has become the first state to provide social security welfare benefits to gig economy. That is the reason this becomes very important. It has become the first state in India to provide social security welfare benefits to the gig workers. That is the reason. Okay. Now, come back to this. Any difficulties in this slide? Can we go forward? I will get Bangalore edition. Will I get it? Of course, yes, my dear. You can take any edition, Bangalore, Delhi edition, whatever it is. You will get the same articles. Okay. Parallel economy. Parallel economy basically is the black money which is getting circulated. Okay. Circulated. What is this idea of a circulation of black money? I said this 100 rupee, if it is white money, I can go to the market, purchase goods and services. If it is black money, I can go to the market, purchase goods and services. So it doesn't make any difference whether this money is white or black. Both will get circulated. Parallel means what? Parallel means without any connection. Both will get circulated in the economy. Hence, black money is referred as a parallel economy. Okay, can we go forward? Giffen paradox, all of that. Don't worry. Some of you are reading much more than what is actually required for. Unaccounted means the government doesn't know what is the source and they are not collecting taxes on it as of now. That is meaning of unaccounted. So explain. Are Baba, repeat everything. What is this? Right? One student says, explain all the points. And I don't understand. Very bad. Black money means unaccounted money. Government doesn't know how it is collected or how you earn. What is the source? You're not paying taxes, so automatically they will not be able to collect. I'm sorry, they will not be able to count it in the form of GDP. Services of the housewives means the welfare services. For example, right? You must have seen. Again, I'm not promoting this. I'm not promoting this, but you must have seen in your households or somebody else's households. Everybody says, sir, I've seen, but it doesn't happen in my house. So let's say you must have seen in your friend's house, right? The mother, right, will keep on providing all the services. Mother will cook, clean, wash, dry. Everything is done by mother, right? But for that work done, we are not paying any money. That is the meaning of services provided by housewives. Right? For that, we are not paying money. Hence, this is not be counted. Okay. Transfer payments, one-sided payments. Best example is welfare payments. No goods or services are purchased here. Hence, right, don't count it. Old goods are already counted when they were manufactured. Hence, do not count it when they are resold. Okay. That is a discussion regarding concept of GDP. Right. That is the discussion regarding gross domestic product. Next one, gross national product. Next one is a concept of gross national product. Now, what is this idea of a gross national product? Please understand this very carefully. After this, we'll take a break. Follow the discussion. Gross domestic product focuses on territorial production. Correct? Tell me. If I'm wrong, please do let me know. Gross domestic product focuses on territorial production. Territorial means, right, within the territory of India, how much is the market price of all the goods and services which are produced? How much is the market price? Get the sum total of it, you will get GDP. Whereas a gross national product, it is a nationality concept. It is a nationality concept. What do you mean by nationality? How much is the market prices of goods and services, final goods and services produced by all the Indians? Understand my statement? All the Indian residents, they will use the term residents. Technically, it is a resident, but don't worry. Right? There's a technical term called as resident. All the final goods and services, that is the market prices of all the final goods and services which are produced by Indians, whether it is an Indian company, whether it is an Indian citizen, does not matter. Whether they are producing this within India or outside India does not matter. We will count it as a part of India's gross national production. Right now, what do you mean by this? Let me give you certain examples. Let me give you certain examples. 1, 2, 3, 4, and 5. And by the way, right, many of you ask me definition. Definition is here. Market price, what is gross national product? It is the market price of all the final goods and services produced by the nationals of a country within a financial year. Now, whether they are producing these goods and services within India or outside India does not matter. It is accounted as a part of GNP. Now, let's start. Example 1. A company, that is an Indian company, is working and earning profit within India. I'll repeat the statement. An Indian company is working and is basically earning profits within India. Is it counted while calculating GDP? Let me know. Profits earned by an Indian company earning in India, will it be counted as a part of India's GDP? Yes. Is it counted as a part of India's GNP? Again, answer is yes. Why? It is an Indian company. Focus. It is an Indian company. Point number 2. Indian company is working abroad and is generating profits. An Indian company is working in USA, right? And it is generating profits in USA. Point number 1. The profits generated in USA, will you count it while calculating India's GDP? Answer it. The profits earned by Indian company in USA. Please understand the point. In USA, not in India. In USA. Is it counted as a part of GDP calculation for India? No. Why? My dear, you are not following the basics then. GDP means what? Should be produced in India. Should be produced in India. But it is producing in USA. Generating profits in USA. So GDP? No. What about GNP? It is an Indian company. It is an Indian company. So whether they are earning profit in India, USA, right, or UK or China, does not matter. In GNP, yes. Third statement. Indian citizen is working abroad. Indian citizen is working abroad. Point number 1. The citizen, let's say you're a software engineer. Citizen is, that is, you're a software engineer. You will go to USA for 6 months. Correct? Many of you must have seen this. Right? Indian software engineers will go to USA for 2 months, 3 months, 6 months, right? Onshore work, etc., etc. Then they'll come back. So understand the argument here. Imagine you have gone to USA for 6 months and you will earn salary in USA. I repeat, you will earn a salary in USA. Will you count this salary as part of India's GDP? Will you count this salary as a part of GDP? No. Why? You're earning salary in USA, which means you're providing your labor services in USA and you're getting paid in USA. So you're producing the goods or services in USA. So no, you will not be counting that, right? You're not counting that in GDP. But will it be counted as a part of GNP? Yes. Right? It will be counted as a part of GNP because you're an Indian citizen. Next one. Foreign citizen is working in India. Foreign citizen is working in India. Just like you have gone to USA, imagine a specialist or a consultant will come to India for 3 months, for 6 months. Question number 1. Salary earned by this foreign consultant working in India, will it be counted as part of GDP? Will it be counted as a part of GDP? Answer is yes. Because, some of you are saying no. Why? GDP, GDP. How many times should I keep on repeating this? Anything that is produced in India, right? Tell me, did we not have go through the same cycle, circus at least 10 times now? Anything that is produced in India, count it as part of GDP. And anything that is produced by Indians, right, count it as part of GNP. Right, again and again, same exercise. Right? Don't waste your time. Foreign citizen is working in India. Working in India. So production is happening in India. So GDP, yes. What about GNP? Foreign citizen. What about GNP? Answer is no. Okay. Foreign company working in India. Foreign company working in India. Right. GDP, yes. GNP, no. Any difficulty in the 5 examples that I've given? And one student is asking, what is the difference between GDP and GNP? My dear, what are we doing then? You tell me, what are we doing? Did we not start with the basic difference between both GDP and GNP? GDP is the market prices of all the goods and services produced in the territory of India. Whereas GNP is the final goods and services market prices of that which is produced by Indian residents, Indian nationals. Whether they are producing them within India or outside India does not matter. You will count it as part of India's GNP. Can we go forward? Any problem with this idea? Any problem with any of the 5 examples that I've given here? Please do let me know. Sir, if Indian company is operating in USA, it will pay taxes to US government, then won't it give misleading figure if you include in India as a GNP? My dear, GDP is different, GNP is different. Why are you combining both of them? Both are different. Okay. Rather than saying, hey, you, give me an answer. When I'm looking at the comment, please type. Please type your question. Right? This is very bad habit. Right? A student says, right, you're not answering my question. Rather than saying that, please tell me what is the question. I ask you every after 20 minutes, after 15 or 30 minutes, I ask you any question. Type it. I'm looking at the comment, I'll answer it. Right? Are embassies of India included in GDP? My dear, you tell me. Embassies are part of Indian territory or not? Let me know. Are Indian embassies part of Indian territory or not? They are counted as part of Indian territories. Right? You will learn it in polity. Don't worry. They are counted as part of Indian territories. Hence, yes. I believe you're looking at Google, you're looking at somewhere, and right, you're throwing those questions to me. In expenditure method, we do not focus on saving. Why should you focus on savings? What is the connection between savings and GDP through expenditure method? GDP focuses on what is the market price of goods and services. You save money, but whatever you spend, you will count it in the form of GDP. That's it. Don't complicate everything. Okay. Now, this is basically gross national product. Considers the income generated by the citizens of a country present within or outside the country. And when I say citizens here, right, look at it in a broader way. Right, rather than citizens, they will write residents. Resident simply means it could be a company, it could be, right, an individual, it could be, right, a household, etc. So resident is a broader term. Usually they will use the term resident or even nationals. Nationals of a country, whether they are living within India or outside India. Now, before going forward, there is a technical term here, net. Right, before going forward, there's a technical term, net. Let me explain the term net to you. Now, let's say, follow this very carefully. I'll give you a very simple example. Don't by heart this. Let's say you become IS officer, and you become IS officer, and you will get the document from the government which says, right, your salary per annum is 12 lakh rupees. Okay. All of you become IS officer. Congrats. So government says your salary per annum will be 12 lakh rupees. Now many of you, right, are very good with CSAT. You will take out your mobile, go to the calculator app, divide 12 lakh by 12 months. You'll type 12 lakh divided by 12. And the app will tell you, congrats, your salary is 1 lakh rupees per month. Now, please tell me, will you get 1 lakh rupees after the end of month in your bank account? Think of it. Think of it. Will you get exactly 1 lakh rupees in your bank account? Answer is no. Why? This is a gross salary. This is a gross salary. This is gross salary. But what government says is, out of this gross salary, I will withhold your contributions, right, to PF, provident funds, pension funds. I'll withhold your contributions. I will withhold taxes. Correct? So after making certain deductions like this, maybe you will get somewhere around 80,000 rupees. Now, can I simply say gross means total? Any problem? Please do let me know. Gross means total. From the total, certain adjustments are done. Gross means total. From the total, certain adjustments are done and you will get net. Any problem here? Can we go forward? Gross is total. From the total, certain adjustments are done, certain changes are done to arrive at net. Now, this is the basic idea. Please remember this. Now, why this is important? You will come across this formula. Please look at the formula here. GNP is equal to GDP plus NFIA. Okay. GNP is equal to GDP plus NFIA. What is this NFIA? Net factor income from abroad. Net factor income from abroad. Now, what is this net factor income from abroad? Right, I'll give you one simple calculation. Let me know whether this makes sense to you or not. Point number one, GDP. Understand this? GDP, can I say? I'll take a very simple example. GDP will include salaries earned by Indians who are working in India and foreigners who are working in India. Let me know. I'll repeat it. GDP, when you calculate, a foreigner working in India, it will be included, and Indians who are working in India, it is included. Now, simple question to you people. If you want to move from GDP to GNP, gross national product, should you be counting the salaries earned by foreigners in India? Let me know. If you want to use GDP to calculate GNP, should you be counting salaries earned by foreigners? Your answer will be no. All of you will agree? So can I write like this? GNP is equal to GDP minus salary earned by foreigners living in India. But on the other hand, what about a software engineer who is an Indian, but he is working in USA for a period of 3 months? Please tell me, is the salary included in the calculation of GDP of India? Arey Baba, listen to the question carefully. Listen to the question carefully. A software engineer who is an Indian is working in USA for 3 months. Is the salary of the software engineer included in GDP? GDP. Is it included? No. But don't you think it should be included in GNP? I hope you understand. It should be included in GNP. So, when I want to calculate GNP, I'll write it like this. GDP minus a salary earned by foreigner in India. Now, I will add salary earned by Indian living outside India. Now, please tell me, will this give you the market prices of all the goods and services produced by Indians, whether they are living in India or outside India? Any problem? I'll repeat it again. Now look at the formula for GNP. Will it not tell you what is the market price of all the goods and services which are produced by Indians, whether they are living in India or outside India? But please understand, this is one factor. This is one of the factor. What about companies? Let me know. What about companies here? Right. In case of GDP calculation, can I give you one more adjustment here? Can I give you one more adjustment? What about profits earned by foreign companies in India? Is it included in the calculation of GDP? Of course, yes. What about Indian companies earning profit in India? It is already part of GDP. Can I also make adjustment like this? Right? If I want to arrive at GNP, I will have to exclude from GDP profits earned by foreign companies in India, add profits earned by Indian companies abroad. Any difficulty? Please do let me know. Any difficulty? In the same way, right, different types of factor incomes, different types of